The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Wednesday morning, just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading, and you got markets barely in the positive right now. S&P is up by 3 points, trading at 42.93, just below that 4,300 price point. We hit a high of 43.05. We have a VIX just above 14. Deservedly so. When you look at this market, you talk about a trading range, man. Since the acceleration in Friday, you're talking about basically a 20-point range. 4280, the lower boundary, about 4300, the upper boundary. We're sitting in that level right now, and we'll see where we go from there. But man, you talk about a VIX, right? Let's just jump over to the VIX because you talk about it. 1395. We got a 1395 handle on the VIX. Remarkable. We're sitting at 1406 this morning. NASDAQ 100, you're positive by 10 points, 14,596. You get the Dow up by 9. The Russell leading the way, up by 0.6. How about the acceleration of the Russell yesterday? Right? You're talking about almost 60 points from low to high. That is some volatility to the upside, to put it lightly. Crude, 72.42 so far this morning. You get the gold contract down by $6 at $19.75. We jump to notes and bonds, the 10-year. Lower price, higher yield, off about 3 ticks at 113.21. You get the 30-year off 4 ticks, 127.25. We jump over to the dollar index this morning. DXY. Little bit of weakness in the dollar index, under 104 at 103.94 right now. And let's jump around to some of the FANG stocks as we kick things off. Apple, Worldwide Developer Conference on Monday. You sell off from all-time highs of 184.95. We're sitting at 178.84. Slightly in the red so far this morning. You jump over to Microsoft shares. Down a bit as well, 132.64. Down about $1 from the close of yesterday. Google Alphabet. Basically flat, 127.72. You jump over to NVIDIA shares. NVIDIA trading at about 388 after their spike higher last week, 405. Got it back up. 419 actually is the high last Tuesday. You get that acceleration on their earnings, 2 weeks ago now? 2 weeks ago? 2 weeks ago? That is crazy that is 2 weeks ago. That is a fast 2 weeks, man. Yeah, May 24th when they upped the forecast from 7 billion to 11 billion. And the AI craze really began overnight 2 weeks ago. That is a fast 2 weeks, man. Remarkable. All right, we jump around. What else do we got going on? We got to jump to Coinbase, man. Kathy Wood, she is out buying more Coinbase. How about the rebound yesterday? Pretty stark when you think about the fact that this thing on Monday traded down to 55. We're trading right now right near 53. You made it all the way up to 59. You traded down to 45 on the news the SEC was suing them. I guess the writing was on the wall when Binance got sued. And the reaction from 64 down to 56 down to 53 is enough. But, boy, she was in there buying. Maybe that's part of the reason you caught a little bit of a bid on Coinbase. Be careful on Coinbase, man. I was talking about it yesterday. If you want some action in crypto, folks, I would just buy some crypto and put it into a hard wallet. Simple as that. I wouldn't be using Coinbase, and I definitely wouldn't be keeping my crypto on Coinbase, for sure. We jump over to Bitcoin. Down $370, trading at 27,000. All things considered, though, folks, how things have gone recently in terms of the FTX Ponzi scheme, Binance getting sued, Coinbase getting sued, Bitcoin is well above where it was trading at before all that happened. Whew. If that's not a head scratcher, right? Pretty remarkable when you put it that way. All right, let's jump around to some of the headlines we got pulled up here. And let's kick it off with Kathy Wood. Why not? Because you got to pay attention, man. Pretty remarkable how she's just doubling down on everything here. Maybe that's the opportunity, but I think there's a lot of better areas in the market that you can have that type of opportunity for upside without going into a company like Coinbase, even before the SEC sued them, folks. How about 419,000 shares is what she bought as it traded down 21%. And yeah, you got a little bit of a bounce, but be careful there, man. That they're going to have a legitimate case, I imagine, being a public company that's backed by endless amounts of private equity money. they're going to have a case in court, I'm sure, Coinbase in particular versus a company like Binance. But the SEC is bringing it, man. And my guess is they have a few holes in their case, to put it lightly, if the SEC is bringing it. Okay, let's talk a little bit of world economy. The number that, and to get who, the OECD, okay, is talking about pre-COVID levels. So a little bit big picture here. You're talking about growth expectations of 2.7% this year and 2.9% 2024. This is global, not in the U.S., okay? But we were averaging 3.4% pre-pandemic, man, and you're only talking about 2.7 and 2.9. And then think about the inflation that you have going on, and you're only growing the economy at 2.7 and 2.9. The U.S., Euro, and China will see some relative sluggishness in their recoveries, while inflation will be stronger than in the period through 2019. So take that one for what it's worth. We got to talk about the PGA, man, just from a remarkable perspective. If anything, man, make sure you're always watching out for yourself in all of this, because it's pretty remarkable that you had people go to bat for the PGA, like Rory, like Tiger in particular. They forego 9-figure paydays themselves to support the tour, and behind the scenes, the people running the tour were making a deal for their own self-services. So, boy, pretty tough that they left that kind of money on the table when it didn't matter at all, and they come together after all that. But yeah, because that was the other side of that. Everybody was taking a lot of heat there. And listen, the other side of that is, I don't know if I would have been doing business with the Saudis, okay? Just to put that out there. There are risks that come with that, man. You take $100 million of Saudi Arabian money, maybe they come back to you next year and ask you to do something that you're not as comfortable with. I mean, that's a real deal, okay? So that goes in there. But pretty remarkable. They secured generational wealth many times over, and the people that passed it up for moral reasons, it didn't matter at all. And this it's going to be interesting to see how this comes together, because if those players are not made whole, and I imagine they cannot be made whole, because you're talking about a hole that's $1 billion for Tiger and $100 million for Rory and et cetera down the line, there's going to be a division forever among those players as they supposedly come together. So it'll be interesting to see how it works out, interesting to see the details going on and how that progresses. But yeah, talk about a shocker yesterday, to put it lightly, man. And boy, I can't imagine how some of those players reacted when they found out. All right, jumping over to one of the other stories we've been talking about, and it keeps circling, rightfully so. So the Treasury, I saw something today. They're expected to have $400+ billion already in their coffers by the end of June. The government could face borrowing at rates near 6%, up from 0.1% less than 2 years ago. Okay, you're going to talk about $1 trillion of debt, and here's the only thing I'm going to say about this, because this is the part that matters. Some on Wall Street fear the roughly $800 billion in bond issuance, okay? There is going to be a supply of bond issuance. What determines price is supply and demand. The fact that somebody is coming to the market to raise $1 trillion will matter, okay? Now, I don't have a vast enough fundamental knowledge of the interworkings of raising $1 trillion and how that hits the bond market, but I do know that supply and demand matter, and that's a supply. So be aware of it. Talk a little bit more when we get back. We'll come back with Kevin Hincks after the break, folks. Stay tuned. We'll be right back.
We have exciting news, Tigers. This June, Tim Ord of the Ord Oracle will be hosting 2 webinars providing insight into his renowned market timing methodologies. On June 8th, Tim will delve into the S&P 500, teaching sentiment indicators, identifying market bottoms and divergence, and so much more. On June 15th, Tim pivots to the gold market, taking a look at cycle analysis, ratio studies, advanced decline indicators, and other important tools for analyzing this sector. Sign up today on TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. Welcome back, folks. We got the S&Ps right now up by about 4 points, trading at 42.94. You got the NASDAQ 100 up by 15, Dow up by 18. The Russell extending the gains of yesterday, up by 0.6%, up 11 points at 1869. Let's jump over to our man Kevin Hincks from the TD Ameritrade Network. Every day, folks, right here, 12 noon Eastern Time, fast market from the TD Ameritrade Network with Kevin Hincks, Tom White. They got an outstanding lineup of guests. They walk you through hypothetical trade setups, folks. Every single show, they're walking you through 3 different trades that you can do to learn hypothetically in the options market. All of them have defined risk. Kevin Hincks, we got a 13 handle on the VIX yesterday. Good morning, man.
Good morning, Tommy O'Brien. Yeah, I was just talking about that with Oliver Rennick. Tommy, if you think it can't go lower, it can. I've got financial and emotional scars over my career from trading volatility in the summer. And you have to be extremely careful because what's going on the last 24 or 36 months is no longer going on. There's no more COVID scares. A lot of things are coming back into, all that is dissipating, Tommy. And normally, for your viewers, just take a Thinkorswim platform of the VIX and take it out 10 years and see how far down VIX can go in a slow, grinding higher market. And I'm telling you, it can go lower than it is right now. Now, that's subject to change without notice if the fact that the NASDAQ has gone too far and it were to start to correct. But some news has to change that, some event. It always can. It happens often. But right now, a VIX at 14, the average is 15.4. But as you know, it can spend a serious amount of time below that level, and that's what you're seeing right now, Tommy.
Yeah, pretty remarkable. And I pulled it back, Kevin, on the VIX on the Thinkorswim platform. The number that jumps out is 856 in 2017. And boy, 2017 was a banger, man. We spent most of the year at about 10, which is pretty crazy.
Yeah.
I was going to ask you, as in, what do you think about the perspective, Kevin? Because I'm sure some traders, they're looking at the market, especially since the run-up we had Friday, when we really got that dive lower in the VIX. You now have the S&P chopping around between about 4,280 and 4,300. The VIX is right at about 14. But what do you think, and I know this is obviously opinion, it's perspective, but for traders, I mean, maybe this is the time, even though it's a lower volatility number, to potentially be selling a little bit of volatility if the market's just chopping around 10 to 20 points on the S&P, as is deservedly putting the VIX at, a low number of 14.
The million-dollar question always in markets is when and from what level, right? When is the VIX going to go back up, and from what level is it going to? When is the stock going back? When is the NASDAQ going back down, and from what level? Those are the questions we constantly ask as traders, and I have no idea, right?
The answers aren't coming up.
If some news were to come out, I think the entire trading universe should be aware that AI is going to be big, but so was streaming, and so was, the internet, and so was all. There's been fads all along, and these stocks get not done, but way overdone. And so competition is going to come into this market just like it came into streaming, and there will be one winner or a handful of winners and a bunch of that won't do well. So, I think these companies are all high quality, but that doesn't mean I want to be long them, Tommy.
Yeah, it's just remarkable, man, trying to figure it out in terms of the valuations, the future. It's so tough to imagine, man. You got Apple launching their augmented reality headset. Are we really going to be walking around living in augmented reality? Well, my dad was saying, Kevin, would you have believed, 20, 25 years ago if I told you every single person was going to be staring at their phone everywhere they go, looking at it, not looking at you, doing all this stuff? It's technology, man. It takes over. And the one number, as you put it, valuations, NVIDIA, folks, you try to comprehend. I think it was something like, Kevin, 25 times future sales. And yeah, it's a great company, but I don't think a lot of people, Kevin, if you really walk them through some of these valuations and how you get to that number, and if you actually gave them, I watch Shark Tank sometimes on CNBC late at night, just chilling out, relaxing. And if you ever came into Shark Tank and you said, well, I took in, $1 million this year, I made couple $100,000, I got 20% margins. These are much higher margins on NVIDIA, I'm sure. But then you said, so I want $25 million for my company, right? Say, I don't know if we're going to pull that one. Anyway, we did. What are you guys talking about coming up on Fast Market today at 12, Kevin?
We're going to, Lightfolio is going to cover the final name in our Magnificent Seven, which is Tesla. And then there's news, Tommy. If you look at Visa and MasterCard, they have market maker moves. There's some things going out about lawmakers to reintroduce a bill to reduce their fees. So we're going to look at Visa and MasterCard and talk through what that means for this company. And as we get to a more and more cashless society, what does it mean? And lawmakers, if they're coming at them, does that hurt the stock or is it a trading opportunity, Tommy? So Visa, MasterCard, and then in the middle, Lightfolio is going to talk about Tesla.
And if you could, Kevin, for the listeners out there that haven't seen you explain this, heard you walk the listeners, viewers through it, I have these up on the Thinkorswim platform. I have the market maker expected move, $8 and change, and then I can see the contracts in here. The ones expiring this Friday, about a $7 move in there. You have the implied volatility up there, I think, at about 49%. Could you walk those viewers, just as you say, there's a market maker expected move. I have it up there. What that exactly means, how it's generated on the Thinkorswim platform?
Yeah, if you're on the Thinkorswim platform and you see right in the middle of the page, that third line from the top, you see that yellow MMM. That's called the market maker move. And right now in Visa, it's plus or minus $8.05. That's generated automatically, Tommy, when that far right implied volatility that you just mentioned is at 49.7. When it crosses over the next volatility, which is down around 11, if you look at it. When that happens, when that second number goes through, or that first number goes through the second number, that generates a market maker move. And what it is means volatility is elevated, and we have to, and it will generate some event. And we're waiting for this news to kind of play out here with U.S. lawmakers and fees that MasterCard and Visa can charge. So that number is generated simply by the implied volatility and the expected one-day move, the event effect on implied vol.
It's pretty cool, man. And folks, that's why you got to check out Fast Market at 12 today, because Kevin, I've learned so much from you guys' program, understanding the implied move, the implied volatility, and usually I'm used to this number around earnings in particular. But pretty cool how you walk that through. We have an event. We have an unknown event taking place sometime in the near future. And $8, that's a decent move for Visa, $228. Kevin, I appreciate the time as always, man. We'll be watching Fast Market at 12 today, and I look forward to talking to you tomorrow.
Have a great day, Tommy.
You too. Folks, check it out every trading day. And yeah, pretty interesting how that works. And folks, even if you don't trade options, okay, I always say it, you should understand how these numbers work. Implied volatility, okay, implied volatility around events taking place. Because if you're an equities trader, that is information that is valuable beyond trading options, because you should be aware that you have an event out there, okay, and there's volatility potentially in both directions. Are you willing to expose yourself to an $8 move basically overnight as this news breaks? Pretty cool. Visa shares trading right now slightly lower at 227 right now. Market positive by 4 points. Stay tuned, folks. We're coming back for the open. And don't go away as well. We got our man Teddy Kegstack coming up the segment after that at 9:40.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has just launched their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. You got an S&P up by about 3 points right now, trading at 42.93. NASDAQ up by 18. And how about the Russell, man, right? The Russell popping yet again, up 1.4%. The Russell's up 4% plus from where we were trading yesterday morning, man, let alone you back it up to last Thursday. We traded 1750. I mean, look at this extension, man. Yeah, you just traded from 1750 to 1883. What is that? 130 points. It's like a 6-7% pop in this index over the last, including, of course, the acceleration the markets had last week. But boy, the markets have been pretty steady this week, and you get the Russell popping dramatically. Just jumping around to some of the banks. I know it's going to be some of the regional banks for sure, but the big banks pretty calm right now. Jump over to the airlines. Delta up about 0.5% right now. American up 0.5%. Let's see how the FANG is trading. Apple shares up by 0.1% so far to kick things off. We get the NASDAQ 100 catch a little bit on the open, up by 45 right now. Google shares up by 0.6%. Meta shares up by about 0.4%. We jump over to NVIDIA. 392 up by 1.5%. Man, it's not going to end. Netflix jumping into the foray. Yeah, check it out. Up 3.1%. Some of the other streamers, Disney, barely in the green, up by 0.6. Warner Brothers up by 0.3. But Netflix, it was interesting. They haven't been as much of a focus recently, but they are a part of the reason why this acceleration is going on. And that is the 8 stocks we got going on. So you got the Magnificent 7, and you got the Mega Cap 8. 8 Mega Cap stocks make for a funny sort of bull market, and Netflix is the one that is thrown into there. So you got NVIDIA, Apple, Microsoft, Amazon, Meta, Google, and Tesla. Magnificent 7. Mega Cap 8 is there. Add Netflix into the foray, and you got to check out this chart because it's pretty amazing. The NYSE comp up 0.6%. Every other stock that we just talked about, bonkers numbers. NVIDIA up 167. Meta pushing 126. Tesla 73%. Even Amazon. Excuse me, let me find it in the mix there. Come on, where are you? Well, you see it. They're all up 50, 40, 30, 25, etc. Pretty staggering numbers. And when we're talking about those valuations, okay, because here's the part to leave you with. Because, as Kevin said, the million-dollar questions. Nobody knows these answers, folks, okay? You need to have opinions as a trader. That's the bottom line. Unless you're a market maker, okay, and you're somehow absorbing that. Now, you can be the one selling premium. You can be the one buying premium. You can be the one buying stocks, selling stocks, etc. So you can be both sides of it. You got to have an opinion, though, because if there was easy money to be made out there of just arbitraging whatever it is, it's probably being made. Doesn't mean it always is. Okay, there are definitely opportunities, but it's probably being made. So you need to have an opinion. Now, the tough part about the opinion in terms of the valuations, where we are, and this is like the simple way to look at things, okay? Let me get this right. What can go wrong for buyers of what are undoubtedly some of the world's greatest companies? The usual mistake is to overpay. Companies that everyone agrees are great are more likely to be overpriced than ones everyone agrees are rubbish. So realize the euphoria taking place right now. It's real in the essence of NVIDIA just upped their outlook from $7 billion to $11 billion. Okay, that's revenue that they're going to take in that they didn't think they were going to take in like 90 days ago. So there's a real factor there. But every company with AI transitioning, the amount of money it's going to take, how that's going to play out, it may already be calculated in. It kind of is like Apple, where I talked about Apple's almost added $1 trillion in market cap this year alone. Microsoft's added almost $800 billion in market cap this year alone. That has been added for the euphoria that everybody's already felt, not from this point forward that you buy the euphoria after the price goes up. So be careful of those numbers here, okay? Expectations for Tesla's earnings and sales have both fallen sharply this year, although that hasn't stopped its share soaring 54 times forecast earnings. These are numbers that should jump out at you, man. 2023 goes for growth, okay? Growth, what do we got? This is the Russell 1000. Up 23%, value, flat. Alphabet and Meta both rely on online advertising, which has matured and so may be vulnerable to economic weakness. Amazon's online retailing, been a problem recently, okay? Now, I will argue that Amazon is not getting enough love, man, for the segments of their market, which are, number one, advertising, which is growing tremendously, and seller services, also a big part of Amazon's revenue, which is growing tremendously. But nonetheless, folks, okay, you see those numbers in NVIDIA. I think it is, because I remember it's something like for NVIDIA shares, 25 times future sales or something bonkers like that. Then you think about a PE ratio is mostly how companies are valued, because it is all about earnings. I'm sure they're going to have some hefty margins, as most tech companies usually do. But 25 times your sales, you better be growing at some rapid levels, and it better be growing forever. And there's always going to be competition that comes in there. Okay, we saw these numbers get out of whack during the pandemic, so pay attention to them now, because they're getting a little lofty, to put it lightly. Apple has 16 billion shares outstanding, 15.7 something because of their buybacks recently, but 16 billion shares for simple math outstanding. If the company was valued at $1, it would be a $16 billion company. Okay, it's valued at $180, so it's pushing $3 trillion. But they have added about $60 per share, which is about, $960 billion in market cap. They literally added almost $1 trillion in market cap this year alone. We didn't even see $1 trillion company. You just got, I know I've harped on it, but remember that, folks, because the levels that we've built into some of these equities right now, profits matter. Apple's not going to make any money off that Vision Pro. They're probably going to recoup $3 billion when they sell a million units. They're going to sell 1 million units, they think, at $3,000, maybe $3,500. So they take in $3.5 billion. They're not going to make much money on that. There's going to be other future versions of that they're trying to push out to the masses, and then they'll make money. So there's a lot of optimism across the board in all those equities. So it's 8 stocks now. It's not 7. Talked about the Treasury. We talked about Miss Kathy Woods. What else do we got? Yeah, how about China? There's a story out there right now. We got the China exports declined 7.5% in May. Market was only looking for a 1.8% drop, fueling growth risks. So pay attention to this one, man, because China is done with the days that they're growing like they were. It's just not going to go back to that level. And you look at where they are. Okay, this is talking about global demand for Chinese goods looks to be weakening. And yeah, when you break down the number, okay, and you combine it to where you are, that looks like we're on a decline, man. Take COVID out of it as well. You're talking about going back to 2022, 2021. Yeah, I guess that was their COVID spike originally. And that's where they're going across the board. But when you miss by 1.8 to 7 something percent, folks, China's got some problems, man. You're seeing it with the rates. They're trying to shore up some investments across the board, but they got some problems. Dollar index down 31 ticks. Stay tuned, folks. We're coming back. We'll be talking some Forex. We'll talk some crude oil when we get back. We'll be talking to our man Teddy Kegstad from the Tiger Forex Report. We'll be right back.
We have exciting news, Tigers. This June, Tim Ord of the Ord Oracle will be hosting 2 webinars providing insight into his renowned market timing methodologies. On June 8th, Tim will delve into the S&P 500, teaching sentiment indicators, identifying market bottoms and divergence, and so much more. On June 15th, Tim pivots to the gold market, taking a look at cycle analysis, ratio studies, advanced decline indicators, and other important tools for analyzing this sector. Sign up today on TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We check in on the market. You got markets right now in positive territory. You got the S&P inching towards, climbing above the highs that we had early in the week. We're at 43.02 right now. You're up by 12 points in the S&P. You jump over to the dollar index. We got the dollar index right now down at about 30 pennies at 103.87. And making sure, we sure do. Let's jump over to our man Teddy Kegstad. Folks, you can read Teddy's Tiger Forex Report every Monday. He puts out a new issue. You can head over to the front page of TFNN under the newsletter tab. You can subscribe for $97 a month, folks. It comes with a 30-day money-back guarantee. You have a couple great webinars in there as well. And always interesting on Wednesday. We're a week out from a Fed decision. Teddy Kegstad, good morning.
Good morning, Tommy.
So we got a little bit of calm action right now, as opposed to usually. We come to you on days when we got some economic data, et cetera, and today we got some calm action. What do you think about the calm potentially before next week's Fed meeting?
Yeah, I think that's what you can expect right now is a lot of sideways. Like this morning, now you're starting to see the dollar index start to drop a little bit because you have a nice rally going on in the pound dollar. And the other currencies are starting to also move stronger against the dollar. Like, in fact, up until about 20 minutes ago, the only currencies that really were moving was the U.S. dollar Canada to the downside and the Australian dollar, U.S. dollar to the upside. Everything else was fairly flat or just going, sideways. And if you look at the euro especially, I mean, it's been in the $1.50 range now for 2.5 weeks, basically. So, and I think that's what you're going to see going into next week's meeting as well. So I wouldn't get married to any longs or any shorts right now in any of these markets until after next week.
Yeah, I was going to ask you, just because I was jumping around the Forex market, getting ready for you to come on the program today. And it's interesting how we were in such large trends for so long, like the euro, of course, like the dollar. We've rebounded on both of those charts, inverse, of course, but now we kind of have some chop in these markets. And as a Forex trader, are you looking for those larger types of moves? Because I know that Forex can trend, man. We saw it happen, over the last couple of years or so, but we have had a little bit of calm in these markets right now. And how you approach that as the trend that we just came off is so large, and now we're stuck somewhat in a range. At least I'm looking, you look at the euro, you look at the dollar where we are compared to the beginning of the year, et cetera.
Yeah, well, that's exactly what we're in right now is, currencies especially trend 70% of the time, 30% of the time they're in consolidation periods, which is most markets are actually the opposite. And that's what we're in right now. I've been saying this since, the end of last year, that you can expect us to start to head into this, consolidation period as the Fed eases off on their rate hike, rate. They, remember last year they were raising a half a point at a time. Now they've been doing a quarter point at a time. And there's also other central banks that have been, raising rates too. So that's where we're starting to see that, consolidation factor and the big range trade. I mean, look at the U.S. dollar Canada. That's been in a wide range trade now for 6 months, So, I mean, some of the other currencies were still trending into the past couple of months. But if you look at especially over the past month and a half or so, most of these currencies have gone sideways, and that's to be expected right now as interest rates, if you look at how the yield curve has moved, it's come back a lot off of its, last fall was when it really set, the highs, and we should actually be trading in those areas right now, and we're not. And I think that's what we've done is we've set the lower and upper bands for both interest rates and currencies until we start to really see a real reestablishment of a trend, meaning, like, for instance, they've been calling for the Fed to stop hiking rates now for half a year, and they're still raising rates. I expect them to raise rates in the next meeting. I expect them to continue to raise rates throughout the rest of the year. I don't even see them pausing. I don't see them being aggressive, but I still see them continuing to do what they're doing. I mean, none of their target numbers are close to where they want to be at. So since we're not even remotely close to their target inflation, let alone other numbers as far as unemployment and things like that, you're going to see that momentum come back no matter what as we head into the fall. But right now we're in a consolidation period. And remember, we have an election year coming on. So it usually starts the fall 1 year ahead of the election when the markets start to move again. And I think you'll see that. Right now we passed the debt ceiling, blah, blah again. But those are factors too. They're going to come and hit the economy. And those numbers I think we're going to start to really see as we head into the third quarter as well. And then we'll get our trends reestablished.
Yeah, the Fed deal is going to be pretty cool to watch, man. A week from today, of course, a lot of speculation that they may not hike. Maybe that's their one meeting off. I mean, they're talking about in the den, Teddy, saying, if the Fed continues rate raising, how will the regional banks survive? And when I first heard some of the from the Fed speak, talking about the potential pause or whatever it is, I had to say to myself, boy, things are maybe a little bit tougher than maybe we thought in some of those areas in the banks. And this is my own perspective, just because you lay out the case pretty reasonably. And I think even the Fed would say it, the numbers aren't even close. So what are you doing even talking about pausing? And boy, some of the strains, I mean, commercial real estate, everybody talks about those numbers kind of stark. But all that can provide some volatility for sure. Let's jump to maybe the yen if we could. I want to jump to yen. I want to talk about crude as well. What do you want to jump to?
Okay, well, the U.S. dollar yen obviously today is pulling back a little bit because the dollar is under pressure. But I think that's a short-sighted move. I think that no matter what, the U.S. dollar yen remains in a buy-break position. And I'd like to see the trend. I think if there's a trend out there in a currency, it probably is the U.S. dollar yen right now. So any type of corrections to the downside, I look as a very nice buying opportunity. Especially with crude being stable right now. And if you do see any really big spike in crude also, I think that would help to give a little lift to the U.S. dollar yen trade, especially with like I said, unless the Fed does pause, I don't see that happening. That pressure, those pricing levels should gravitate to higher levels just because of, like I said, the yield curve is out of whack for where it should be. I mean, if you look at where it was, just last fall versus now, how many rate hikes have we had? The market should be, not that it should be lower, but if the pricing was right then, that means that our trend should be reinforced once again, and the bear is going to come back. And when it does, you'll see a big lift in the dollar as well as the yield curve goes higher.
It's pretty cool, man. I can't wait for the press conference next week, no matter what they do, because they're going to have some explaining to do, I think, no matter what they do. As in, if they hike, boy, that's going to take some explaining. And if they don't hike, they're really going to have some explaining to do, because you lay it out, man, the numbers. Seems like there's a tremendous amount of risk pausing at this point when we all know what inflation does to, savers most of all, man. That's just
we don't know what's going to happen with the ECB or the the Bank of England either, So
yeah.
How are they, inflation numbers, look at how they've been for the past 2 months, especially in the UK. if we get another, couple of months of numbers like that in the UK, you have to assume that, and I don't like to use that word ever, but you would think that the Bank of England is going to have to do something to defend, to fight inflation. If they
got to
think that,
Yeah, you got to. That's what's surprising me in the Fed. So I'm with you, man. Teddy, I appreciate it as always, man. I hope you're well. Thanks for the time, and we'll talk to you next Wednesday, man.
Thanks, Tommy. Sounds good.
Thanks.
Take care.
We'll be right back, folks.
Their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the markets right now. Positive territory. S&P up by 10, trading right at about 4,300. NASDAQ 100 up by 45. That's about 0.3%. You get the Dow up by 24. That's barely in the positive. And the Russell crushing it up 1.6% at 1887. And, folks, tomorrow, okay, we got a special event with our man Tim Ord. He'll be doing a 2-hour webinar on the S&P. He's been around for 35 years, folks. He was the #1 gold timer for a while on Timer Digest. He was number 5 in the S&P for a number of years, I guess, in 2004. He's been up there for a while. He's done many interviews with our man Dave White, with my dad. They were doing webinars going back 20 years. Excuse me, not webinars. Seminars, right? Going back 20 years. And he'll be in there tomorrow for 2 hours. I encourage you to check it out. It's $295. He's also doing a gold webinar next week, but you can sign up for the $295 S&P. You want to go to gold, you can still save that $100 if you want next week as well. I'm looking forward to it, man. He's been making some great calls in this market, especially with the S&P, and you can check out what he's going to be talking about. And it's really cool because you talk about how you peg lows, how you peg highs. You know, you look for the panic, you look for certain indicators, sentiment indicators, market bottoms, signs of strength, divergent at tops and bottoms, putting it all together. So check that out, man. It's tomorrow, and I'm looking forward to that seminar myself as well. And this market, pretty remarkable. And, you know, Kevin put it well, man. Yeah, there's your 1391. We make a new low on the VIX. And until we get some action, man, I imagine the VIX isn't going anywhere. Now, listen, a week from today, you might get some VIX action if the chairman really decides to surprise the market. Maybe he comes back and he says, we're skipping this meeting, but guess what? We're probably coming back and we're probably doing another hike next meeting. That would change things. I don't know if he'd say that, but he's probably going to leave himself room. But I don't see a lot happening between this weekend and next week. Market's on somewhat of a co-pilot, sitting at 4,300, positive territory with the VIX trading at a 13 handle. But keep your eye on those currencies, because as you see it, dollar index, right? 103.74. We just did 104.30 earlier in the session. Thanks so much for starting your day off with me, folks. Stay tuned for our man Basil Chapman coming up next. And don't forget about Tim Ord tomorrow at 4 o'clock. Check it out on the front page at TFNN.com right now. Have a great Wednesday, everybody.